Hey guys, so glad to see you all. Good to see all of you guys. Hey, John, how you doing, buddy? I'm still waiting for your charts, by the way. I spoke to the guys in the office. So just drop your charts and your things that you want me to look at. And no problem with me. I'll look at them and give you some inputs and thoughts. So guys, what I want to do, let's have just a very, very quick look at what's happening in the market at the present moment. And then I want to talk to you. I did a pretty interesting analysis on what happened on Monday in the market. But I want to show you something quickly here. I've just pulled up a chart that we're not trading in this particular session. Remember, we're looking at euro and gold. But I've got the pound yen open because I want to just show you something which, quite a lot of times I talk about what happens at the moving average. I talk about make sure there's a confirmed breakout and then take the trade. So here's what just happened in the market earlier on the euro dollar. So I've been watching it, trying to find ways to jump into the trade. Well, let me open up the euro dollar, then I'll come back and I'll show you the difference I want to point out for you, which is important to bear in mind. So if you've been looking at the euro dollar 5 minute, this is what I hope you've been writing on your chart, at the very least on your charts. Probably a lot more. But since the market opened, okay, so the market opened there, we had, how big is it? Five pips trading range in the early part of the Asian session. Okay, so I mean that's pretty big for not pretty big, difficult for you to make any money. By the time you put you take into account, I'm going to go short 1 pip below this and target this. There's no money to be made. So you need some extension, some decent price ranges. But have a look at this. So we're at a trading range. So you would have said, okay, if we break out of this trading range, how far is market likely to go if we break below or if we break above? I mean, if we broke above, you'd be saying to yourself, well, if we broke above that, market is likely to go there. Yeah, and I can start, I'll have enough. If it does go there, there's enough for me to make some decent profits out of it, to get a pullback and trade. But in any case, what we had was the market breaking down below. Now, I'm saying that deliberately because you need to start to really look out for breakouts and say, this is a confirmed breakout. In other words, I have the market breaking, I have the candle bar breaking below something. So here the market is breaking below this sideways pattern. Very slight break beneath that low, but there is, and there's a follow through. Then, of course, there's a pullback to the moving average. The moment you see a pullback to the moving average and the market begin to resume in the direction in which it is going, then you have to start looking for the hidden levels where it's likely to go to using your leg 1, leg 2. So in any case, first there's a measured move. If we break beneath this trading range, measured move is down here. So you kind of know, if the market gets there and turns, you're not surprised. You take out profits, bank your profits, can bank in full or can bank a portion, because the market can carry on going down. It might just give you a big break beneath that, which is fantastic. You make a lot more money. But if you've taken out your profits, it's still fine. You wait for the next opportunity to jump into the trade. But once you see the moving average, okay, now we have the first leg starting from there. Market pulls back, and how far is it likely to go? So There you have two levels, two hidden levels of support. Actually, you can put a third one if you wanted. So right there, that's pulled back to the moving average. So you can see if you get the market turning it, I mean, it's no surprise. Hidden levels, that means you can't see them with your eyes unless you plonk them in, but computers are putting this all the time and price action traders are putting them all the time so you can follow the big money, big institutions and make money. Now, what I want to point out, I always say, so there's a reversal taking place here. Remember, we've got different kinds of reversals. We have reversals at hidden levels of support, or we can also have a major trend reversal. In which case, so here, there is a trend. Okay, clearly you can see the market is going down, it's coming back, creating lower highs, etc. So a trend is being created. So we have a reversal at the hidden level of support. We have a break of the trend line. So two big things happening here, the reversal, two types of reversals at the level of support, and also a major trend reversal. Sometimes you don't have both of them. Now, I've always said, once you see that, the first thing you got to say to yourself is, okay, I've got to find ways to get into the trade. What happens at the moving average? So we have this beautiful break above the moving average. It's a breakout above the average price. So fantastic. And there's follow through. So there's a confirmed breakout. The moment you see that, it's like, hey, happy days. Now let me wait to see. All I want is a pullback to jump into the market, right? Pull back to the 10 EMA, or if the breakout turns out not to be so strong, pull back to the 20 EMA, get a decent reversal, then I'm going to take it. And based on the breakout, I might get out. The market is likely to get to this level. Okay, if the breakout is confirmed, if we have the pullback, got the setup, you're hoping to get the tests of the prior highs. Now, and that's the beauty of price action. You got to be continually asking yourself and thinking, what's happening in the market? What can I see? So guess here what happened. Okay, we don't get the 10 EMA pulling up or coming up, which is a strength of a sign of strength. In other words, market is going sideways, so we don't get a bounce off the 10 EMA. So there's nothing for us to trade. We don't get a bounce off the 20 EMA. So this particular setup and the opportunity to go long is gone. Okay, keep your markers on the chart, but that particular setup is gone to go long. Now you gotta say, okay, what else is happening? What other information is the market showing me? Okay, so at that stage, there's been no setup. So, look back to the left and say, oh, hang on a second. So the market came back. So what it actually did was test that lower high. So that's a double top, but it was testing that. But I'm not going to trade off that. I'm now seeing what's happening. The bears are strong. They have repulsed the bulls. They are strong. So good news. Now, because I've seen that it's a lower high or it could be a perfect double top at the same level, whatever the case may be. Now I've got to wait to see if I do get an opportunity to trade. Now I'm starting to look at my patterns afresh. Okay. So we get a close beneath the moving average. Now, because you had a major trend reversal that has failed, what you want to see, what you're looking for is, well, is the market going to test the previous low? If the bears are strong, they have to break beneath the previous lows, right? That's the objective. If you're a bear, that's your objective. So let's look at previous lows. At a point in time, you can start to get a little bit more refined or finessed with when you experience, when you say, okay, the first thing that if I am a bear, what is the first thing you want to do? First thing you want to do is you want to show the bulls that, well, we got strength here. Okay, so bulls started their breakout here. We want to show that we can close beneath that low. So the bears came, bulls created a double bottom, bears failed, but they tested that. Okay, so that's the first one you got to look at, because that's a sign of strength for the bulls. So far, if your mindset is bullish, you're still saying to yourself, well, okay, fantastic, we failed there, we can create a double bottom, then a higher low, and then trade. Okay, so we are in a trading range. So a trading range is an area where the price is going sideways, is highs, lows. It's an area of agreement. So it's a 50-50 chance, right? That you could just buy at the low of this trading range, and 50-50 chance you will make some money. If you manage your trade, you won't lose money. Or you can just sell when you get to the high to come back here. It's a trading range, okay? But we want to wait because we're trying to find these moves that we can jump in and make some cash. Okay, so now you see there's a double bottom. And what else you see as the market resumes? There is another lower high. So it's a lower high double top, still in a trading range. So which way are you going to go? Ain't going to go anywhere. Just going to have to wait for information, more information. That's what you want. But you are formulating your ideas because you keep looking to the left. We had the lower high here. Okay, now we have another lower high. We have a double bottom. The market is going to break out. It's not going to just keep going sideways for the rest of the day. Yeah, it's not going to do that. Okay, the market will not do that. I can tell you that. We're jumping into the European session. It's the end of the Asian session. Bit of price agreement. There will be some breakout of some form. Okay, but if you're a bull, okay, you're saying, okay, double bottom. Now I gotta wait for my higher low, and you're saying, wow, there's a higher low right there. Okay, so you can say double bottom, failed breakout, there's a higher low. If you're a bull, you can say that's it, and I'm gonna take that trade, put your stop here, and market starts in a direction. When it fails, you get out, or you get out with a small loss if you want to do that. Okay, but we are in a trading range. We are waiting. We're not ignoring what's happened to the left. By the way, if you take those trades, remember I've said this so many times, just manage your trades. Okay, don't kick yourself because you looked at it and say, okay, listen, I've seen all of that. I've seen that breakout above the moving average. I've seen the follow through. Yeah, the market has failed to turn at the 10 EMA, at the 20, but I've seen this double bottom here. Hey, happy days. I'm just waiting for an opportunity to go with a higher low. That's not quite a higher low, but two bar reversal. Then I get that, and I get that follow through. I'm going to take that trade. You can put your entry above that, and you can put your stop here, or more conservatively, which I always advocate, put your stop down here. Put your stop down here. Okay, a couple of questions. I'll look at that just now. Put your stop down here. Okay, and then just say, okay, I'm going to take that trade because bottom of a trading range, my stop is in the correct place. If we do break out, if the bulls come back and we break out above that trading range, I'm likely to get to that high. Fantastic. Take the trade and manage the trade. When you then see that, okay, then saying, oh, okay, all right, still in the trading range, I failed to break out. Then, get out of the trade beneath that, or if you're not fast enough, beneath that, or if you're not fast enough, beneath that, or get stopped out. Doesn't matter. The logic is fine. Manage your trade. Okay, because now you've entered the mode of I'm going to trade a trading range. I've gone from a trading range, change because the market structure has changed. I'm going to trade it differently. Alternatively, if you're waiting and you're saying, okay, I didn't get my entry here, I don't want to trade the trading range, I'm waiting for the breakout. And so far, because I'm seeing that lower high that we had, another lower high, another double top, lower high here, the bias is towards a bearish market. So I now see that I'm going to take that if I want to take that trade. Okay, take that trade. there is a pattern, lower high. I gotta wait for the entry. There is entry, take that trade, or preferably wait for a close beneath the moving average. If you take that trade there, then your early goal is just to get to that low. Okay, you don't know what's going to happen. It could turn here, but you're saying, okay, I'll take it. I get half of my, half of my risk return. That's where I'm gonna go. And the market turns, and that becomes a double bottom. I can get out and hopefully, make a little bit of profit. Or if it's a big candle, it's a bit of a loss. That's fine. I'll manage it, but I'm gonna take a trade. Okay. And in these particular situations, if it just carries on, if you haven't closed your trade, then you just hold out, or you carry on through the trade. Now you have a breakout. If you've not taken that trade and you get that breakout, then this because you're not trading breakouts, and we haven't spoken about breakouts. Okay, you can trade breakouts, but I've not in the 7 months that we've spoken about in this show. I've always spoken about wait for confirmed breakouts, wait for pullbacks. Reason I haven't spoken about breakouts yet, it's most breakouts fail. It's like we trade in a major trend reversal. Things are pretty, even though it's a 5-minute chart, the setup is slow and you love it. Breakout, trend line break, wait for the retest, double bottom, higher low, boom, and go. It's a 40% chance of success, but you can kind of systematically work through it. Breakouts, most breakouts fail. So breakouts, again, are 40% chance of success. The only problem is things happen so fast and so quickly that if you really haven't got your trader mindset right, you're going to be in and out. Do I trade breakouts today? No, I lost money. Oh, look, that's good. Now let me jump in. So we'll get to that. Before the end of the year. We're halfway through the year, more than halfway through the year. But we'll talk about breakouts at some point. But if you didn't take the trade here, then you see the breakout, there's nothing for you to do. Wait for the pullback to the EMA. Now, the problem that you get here is that you don't get a pullback to the EMA. Sorry, guys, let me have a quick look at the questions. Okay. All right, fantastic. I got that. Okay, so if you haven't taken that early trade, now you're in a breakout mode. You've got to wait for the pullback to the 10 EMA, which pullback you don't get. You get a pause, an inside candle, but that's not a pullback. A pullback market is pulling back. It means in a bear trend, we have to break one of these prior highs. Okay, so it's pulling back to higher prices. Then you kind of see, okay, there's a pullback, leg one, leg two. Okay, so we don't get that. We do get sideways price action. So you gotta kind of wait and see. Okay, I didn't get it off the 10. Can I get it off the 20 EMA? I didn't get the first pullback off the 10. You do get a second pullback off the 10 EMA there. I prefer to see a pullback to the 20. So that kind of gets to the 20 and test it. So you could have taken a trade there and stopped down here. If you didn't do that, that for me probably would have been better, just off the 20 EMA. But again, stop is going to be in the right place. At this stage, you know the story. Measured moves, where is it likely to go? Down here. First leg, pullback, second leg. So you can see it turns here, profit taken, everyone is taking the profits. Okay. Now, let me get to something that I want to show in comparison to that other chart I pulled up, the 20 EMA. So here again, we have reversal at hidden level of support. The measured move of a breakout, also a first leg pullback. That side was price action. So a cluster here. So that's a pretty strong level of support. There is also yesterday's low. that's kind of here as well. So that's another area that, so you got 4, 1, 2, 3, 4, at least that we can see. Okay. So the market reverse is there, but you know, you've got to wait and see, well, okay, that's where it's reversing. How strong are the bulls? Because we still, because we had the pullback to the moving average, we still have a trend that formed in there. Okay, I mean, you can clearly see. So there's a trend that formed in there. You could have joined it there if you wanted, joined it there. Okay, you say, okay, let's see the strength of the bulls. So they do give us a close above the moving average. No follow through, but that's fantastic. The bulls have closed above moving average. Market comes back. Now we have a micro double bottom, you know, double bottom, 2 candles only, not a huge double bottom, but that double bottom itself is a higher low double bottom. So all you want is to see the resurgence of the bulls, and what you then want to see is a pullback. You want to see a confirmed breakout, then a pullback to the EMA. But here's where it got interesting. So I'm kind of sitting there and waiting and looking and saying, okay, so this is fantastic. All I want is just another candle closing above that, confirmation of the breakout. And I get a pause, a doji. And that kind of throws me off out of the market, because I want to see, like what we had here, follow through. Okay, because I don't see this. All of this beautiful stuff has happened after the fact. All I'm seeing is what I have here. And all I have now is, oh, okay, the bulls have failed to break above this side. You know, they kind of broke above these closes, but they haven't broken above this side. There's no follow through. So at this point, I'm not convinced that the bulls have strength. So I'm not going to place an order in the market here. And then voila, guess what you get? Big bull breakout, follow through, all fantastic. And you're like, oh man, let me look at these charts again and see what did I miss. And you kind of look at it 3, 4 times. And based on your strategy, you missed nothing. Okay, you didn't get a pullback here. Okay, there was somewhere you could have jumped in here. You don't get a pullback here. And as the market is forming, there is no way for you. The first pullback doesn't turn at the 10 EMA, like we said, wait for the 20, and we're now just getting bear closes. So we got 2 minutes to go almost to the end of this. So if we get this close here, which we got, if this closes beneath that candle, that's good for the bears, because we now have a confirmed breakout beneath the moving average. Then all we want to see is a pullback to the EMA, then we can consider that. Now, where else? Let me just show something quickly before, because I want to show you the comparative on this chart where you could have traded on the pound yen. Where else could the market turn here? Just quick info. Okay, so there is an actual breakout. The market could have turned at the 50% pullback and could have given you a double bottom at the 20 EMA. That would have been a good place to consider placing a trade. Consider placing a trade. You have to make the decision where to place your trade. Remember, this is a coaching program, a training program. Okay, fantastic. Now, keep this in mind and have a look at this other chart here. Pound yen. Okay. Let me do this just so that they are next to each other. And hopefully our instruction will make sense. Okay. So if you look at the structure of the market here, So the whole point is, I guess you could ask, do I miss trades? Do I go back to trades? Do I go back and say, man, what happened? That happens often, but what doesn't happen often is changing my strategies. Okay, if I've defined the way that I trade, which is my strategy, that is what I stick to. And that's what I highly recommend to everyone here. You know, take everything that you're learning from me, take everything that you are learning from my other colleagues, come up with your own trading strategies and stick to them. You know, that's the only way you're gonna improve yourself in the game and you're gonna make money. Okay, so here my strategy says on the euro, I want to see a breakout, I want to see follow through, pull back, and trade. We didn't get that, but guess what we got here? So there is the breakout, there is a follow through, there is a pullback, nothing of the 10 EMA, it didn't bounce off the 10 EMA, but it went back and bounced off the 20 EMA. So that would have been a decent enough trade. So it's a micro double bottom, 2-bar double bottom, it's an inside candle. It's coming off the 20 EMA. So that would have been a great trade to take. And stop is always stop is always in the right place. I laugh at that because guys ask me, where'd you put the stop? Put the stop in the correct place. There is a place to place a stop. 40 pips. Okay. And it would be fantastic to get a 1-to-1 on that market. But because now you have the pullback, you can say, well, that's where the first leg started. And the first leg got to there. First leg got to there, pull back, and you know that's where I'm going to target my profit, because you've also got the pullback and you're off the 20 EMA. You can also say, well, if I break above this trading range, that's how far I'm likely to go. So you'll be targeting to get to your profit levels around that. Well, you didn't get that. You didn't get the profits there. You didn't get that far. The market started to turn before it got to your level. So when you see the market starting to turn, you can get out of your trades because you're not far from your profits, but you can manage it. And the market is also turning at the measured move of this earlier trading range right there. So I think a month or so ago, we spoke of optimal profits. That's the first profits, and maximum profits. And it's always good to have maximum profits, but optimal profits is where you want to take your profits early. So you've got to be taking your profits out there, take it out earlier. And if you didn't take it out and you get that, you still can close your trade. I mean, you wouldn't have been stopped out because your stop is still down there. You wouldn't have lost money. You'd have made a bit of money. But the point I want to just share here is when you see all this beautiful stuff, don't change your strategy. You gotta just wait for it. Still looking at the euro. So we said breakout, follow through. We want a pullback to test the EMA. Are we getting it? No, we're not getting it because it would have bounced off the EMA, after the close for us to trade. So we just gotta wait and get more information. If you're a bull, are you going to trade this, or you're going to have to wait to see if you get a double bottom, higher low? Okay, just double check. You got a question or a comment? So what I primarily just look at is euro dollar and gold. That's what I'm primarily trading. In terms of which markets you trade, So here's the first thing with price action trading. Here's the first thing that's important. All charts are the same. If I was to just put up a chart and not tell you that it's a currency pair, be it major, minor, or cross, or it's a commodity, you're not gonna know. It could be, I don't know, blocks of flats that in an index of blocks of flats, or the US 500, UK, FTSE 100. You just would not know because all charts look the same. The reason we then start to say, okay, what do I trade, is you are looking for volume. You want to get into the markets where these trillions of dollars are washing through every moment. Because that's, I mean, I live in South Africa. I've never traded the USD XAU, the South African rand, because although it's a beautiful currency, I'm in the country, there's no volumes globally. For me, PIP, the spread is very wide. It's a costly currency. There's no movement, so why bother? Then you can start to look at, it's okay, I'm going to trade the majors, I'm going to trade gold, whatever. So the selection now comes on, go for the high volumes where the money is. You're going to choose that, where the transactions are, where the big institutions are, the big economies are. And then also it comes down to your own personal capacity, right? I have, in my early days, I had all the 30 charts, and you're swinging through and you're running through, you're trying to find ways to trade. Then I've narrowed it down. I've gone on a 5-minute, an hourly, daily. There's all sorts of permutations. At the end of the day, it's got to come down to, okay, now I understand how I trade. I've defined my strategies, and my time that I allocate to trading allows me to trade on a daily time frame, because I've got other things to do. I've only got 30 minutes a day, or 4-hourly time frame, or hourly time frame, or I spend a lot of time sitting on my desk, so I can trade the 5-minute time frame because it's right there while I'm doing other stuff, or maybe I trade the hourly or the 15-minute. All of those things you then gotta have to work through and see what kind of fits with there's many ways to choose currencies. I mean, it could be, I don't know, anything, bananas, etc. But ultimately, you've got to master how to trade. You've got to understand your own personality, or your own, where is my optimum trader mindset. And once you got that, then you choose the currency pairs that you trade. Go for the volumes. You got to have, you can be, what's the word, patriotic. I can say, I'm not trading this African rand. But, it's not a very wise decision because there's no volumes there. I say to guys that I coach that if, we have small traders in terms of business traders, and some of them just hang outside schools, or, or you may think of food trucks, for example, whatever it may be. If I'm hanging out outside schools and there's all these primary kids coming out, I'm not gonna stock my shop with rice, am I? Because who's gonna buy uncooked rice to take home to their mother to cook? But I'm gonna stock it with all these sweets and donuts and stuff that the kids just wanna buy, And in that period of time, I want to optimize my trading. Then when they're gone, back up and go home. You're not going to set up a car repair shop next to a school. It's pretty pointless, right? So that's the thing about choosing trades. I mean, choosing currencies that you trade. Okay, yeah. So yeah, it's choosing volumes, but just be wary of that term volumes, because there's all sorts of volume indicators that you can use. Remember, I'm a price action trader. So just go and Google most traded currencies, or currency pairs that have the highest cash volume going through. you'll see, you'll have a look at that. You know, you can look at gold compared to currencies, and you can kind of see the impact of it. But the point is, you can trade anything. I mean, like I've pulled up the pound yen here because a friend of mine is trading the pound yen. They've given me a very sound reasoning why they've got the pound yen on their list of currency, and it makes sense to me. So, you know, that's fine as well. Now, so quick look before we go to, I want to look at Monday. Okay, so here we didn't get what we wanted, right? On the euro, we're hoping that, okay, there's a follow through, a little bounce of the EMA, and maybe we're gonna go leg one, pull back leg two to the low here. So we wait for information. Are we gonna get a double bottom at this level, or are we gonna get a double top? Remember, we spoke about that trading range earlier on. So the same kind of thinking. At some point today, guys, you can come back and check. At some point today, either we're going to break above that and get to that and beyond, or because there's a trading range that's been formed there, or the market is going to try and break beneath this and trade. So that's going to create opportunities for us to trade. So whatever you're doing, just keep looking at that and look at the opportunities. Gold, what has gold done for us so far? Okay, so gold, we've got a double bottom that is formed here. You can see that. And when you have a double bottom, what we're going to wait for is to see if we're going to get a strong breakout above the moving average, a pullback, decent enough pullback for us to trade. And then, we can look to take that long if the bulls are strong. If the bulls are not strong, guess what's going to be created after this trend that we got? Well, the market has tested that level, so we're likely to end up with another trading range. If the bulls are not strong enough to give us a breakout that we're looking for. Okay, and if the bears are strong enough in this session. So if you are a bear, you got to be thinking, if I'm a bear, where do I want the market to go? Okay, the bears would like the market to go down there. So whichever way, you don't need to rush or jump into things. There'll be opportunities for us to make money going long or going short. Okay, if we carry on with the trading range, I think 54 pips. I mean, you can wait for double tops. Lower high, traded to the bottom of the trading range. Okay, you can wait for, there's a double bottom, higher low, traded to the top. You can just go top of the trading range, back to the bottom, and that should be fine. Okay, so what I want to do, I just want to show you so what I recommend, guys, and I really sincerely recommend this. You've got to do these things on your own, because that's the only way that the market is going to come alive before you, that the charts are going to start to make sense, and you're going to start to see these opportunities. It's almost the market will start to speak to you, and things will slow down. I mean, you'll be amazed how slow the 5-minute time frame can be once you start to trade it the correct way. And remember the word FRACTAL, markets are fractal. So whatever chart pattern you see here, you can see on any time frame. So it doesn't matter my instructions of the 5-minute, you gotta use the same kind of thing. So this is what transpired for us on Monday, gold. Okay, and I'm just gonna show you the broad things which I really wanted. I mean, they've got us just start becoming automatic at some point. It doesn't matter what time you come to the market, and you have seen, okay, there's a high, there's market opening, and double bottom. If the market breaks beneath this, where is it likely to go? Market is likely to go there. So I've got to look for opportunities if I can to go short, because the big money is likely to go down that way once we start to get a breakout beneath that. And you do get the breakout beneath that. You have the pullback to the EMA. Remember, I keep saying get the breakout, pullback to the EMA. The problem with this is that you don't have follow through. You don't have breakout, follow through, but you do get the pullback to the EMA. So what do you do when you don't have a confirmed breakout, but you see it and you're saying, well, maybe this is likely to go a little bit further on. So what you want to see is the signal. Sorry about that. The signal candle. This is your signal. It's saying, okay, that's a trade to take. Okay, you want to see if there's follow through beneath that. Okay, because there's follow through, that means it's triggered. So you can either wait for that, see the follow through. Okay, there's a bear candle, decent enough, kind of just broke me that and pulled back. So you could take that trade. Now, if you're taking that trade, remember your chance of success is not as high as if you've had the follow through. That means you got to trade small. So if you're trading 1%, go 0.5%, go 1/3%. It's still 1/3% more than you'd have made. You must always remind yourself that if you've got X amount in the market, at what rate of return do you have to, what's the rate of return you have to earn every month to double your money every year? Now, there ain't no bank in the world that's going to double your money every year. You'll be lucky in some economies if you get 2% on your money. 5, 10% is brilliant on your money a year for 12 months. But you know that all you need is 6% a month consistently for you to double your money every month. Now, 6% over 20 days is pretty easy to make if you are just following your strategies and are patient. So that's why if you see that kind of thing, you're either going to just ignore it and leave it, which is perfectly fine, okay? Or you can say, okay, I'm going to trade 1/3. 1/3 of my usual risk. If I'm always risking 1% in the market, I'm going to trade 1/3 because I might just make 0.3% on the day. That's fantastic. Out of 20 days at 0.3%, I make my 6%. But there will be much more that you can make. Stop always in the right place, okay? Right up here is where you'd put your stop. You could put it there if you wanted, but conservatively up there. This is too tight to put the stop. When the market closes beneath here, you can tighten your stop to here because your goal is to get to here. Okay, then you do get rewarded along the way. So breakout right up to the measured move. So there's a measured move. Okay, let me explain. Measured move of the trading range based on the open of the day. OOD is open of the day, TRI is trading range. MM measured move, BO breakout. Okay, so there is a high, there is the open of the day, the measured move of the trading range created by the open of the day. That's what that means. That's where the one is. Okay, measured move of a trading range breakout. There is a trading range. Okay, breakout. Okay, then we then have a breakout beneath that. The breakout, from the breakout point to the end of the bodies, okay, not the pullback, end of the bodies, there's a potential measured move. So you kind of say, okay, I didn't take that trade. I don't want to risk my 1/3, but I'm going to wait and see if there's an opportunity, because if the bears who created this are strong, the market will likely get down to that particular level. So where do I start to look for opportunities to trade? 50% pullback is very important. There is a breakout. Okay, 50% pullback is very important. Market tries to go back to a 50% pullback, half of the breakout distance. So kind of mark that whenever you see a breakout, say, well, the market might get to that. Okay, so we do get to that almost, and there's a double top, but there's also this hidden level of resistance, which is the 50% pullback. So that is a setup. Okay, so remember, I always talk about see the setup, see the strategy. That is the setup. Now, I'm not going to trade that, but that's the setup, and I'm happy days. I'm saying, okay, fantastic. So we got to this hidden level of support. Guys who took the trades, took their profits and everything. The bears have continued just beneath that level. There's no way for me to trade. Remember, off the 10, you want to see the first pullback. Okay, but there's bearish price action. Market bulls tried to turn it, close above moving average, failed at 50%. Bears tried to resume, fell, but there's a double top, micro double top pretty close to each other. So fantastic. There is a setup. Now I just got to wait for the lower high to trade and jump into the market. So there is a lower high that we get. We're trying to get to here. Okay, that's our goal, to get to here, optimal profits. That's where we want to get. We also have that high at 50%, that low, super profits down here, because that's lower than the earlier levels. So if the market gets down here, fantastic. But I'm going to have to hold on to this trade, right? If it works in my favor, I'm going to hold on to it. So there is a trade to take. Where is the stop? Stop is here. You don't put the stop here just because you see a lot of, not a lot of guys. I've seen that recommended. You're going to get stopped out a lot more times than your strategy is set up to do. Put the stop in the right place and just let the market work. Put it in there and just don't worry about it. If you're worried about it, if you can't hold down to down there, we'll just take full profits here if you want. Okay. And then wait again. So I had that low high, took a trade, either take your profits out here like all the other guys that caused that pullback, or you're just going to wait and see what happens because your stop is there. Okay. Market resumes again. Outside candle, not my favorite to trade, so I would rather wait. I don't like to trade an outside candle because it's just a large trading range. Market tried to break out above that, failed to break out beneath this, might fail. So I'm going to wait. Okay, my bias is still bearish because of that that level of resistance, 50% pullback, and I've taken a trade. Either I'm holding out or I've taken some profits. Then I'm going to wait. Then I see this taking place. Excuse me. So I see this taking place. So that's a double top, just like a double top. I'm still off this pattern, taking the first trade there, or I saw that and I didn't take it, whatever the case may be, or I got out earlier. There's still no reason for you to tighten the stop at all, okay, to here. Only tighten the stop when the market starts to break beneath that. So I get that. So you can take that trade right there and stop here, or you can say, okay, fantastic, I see it. I just want these bears to show me they're strong. They must just give me a close beneath the moving average. You get that close beneath the moving average. You can take your trade there. Stop still in the same place. You're trying to get to here. So if you set your take profits to there, you and a bunch of other sharp price action traders create that tail as you buy back your shorts, because that's where you set your profits. That's it, boom. If you're holding on for super profits to see, well, let me see if I can manage this. You might have set your profits there. But usually when I'm holding for super profits, if I don't take any there, I don't put my take profit there. So the market would have turned, they said, oh, bother, boring, and just closed it again with the same place where you would have taken your profits. Okay. Then at this 1, 2, 3, 4 levels that we see of support, we get the market turning. So no surprise for us to see that. And guess what happens? So Reversal at hidden level of support. Okay, market tries to resume, fails. So at some point, there's a micro double bottom here. This low and that low tries to resume again, fails. Then we have another lower low double bottom, if you like. And say, okay, bulls are strong. There's a reversal taking place. I'm not surprised. But let me see what happens with the bullish bulls. Bearish bulls close above the moving average. Fantastic. You know, George says when you see a close above the moving average, wait for the follow through, unless you are lazy follow through. So now you're coming off. Remember, two types of reversals: reversals at hidden levels of support and major trend reversals. So this is off hidden level of support. All of these that we've seen. Follow through. All we want to see is a pullback. And we get it in the form of a pause, which is fantastic, and put your entry above that, but your stop is way down here, okay? And you say, no, the bulls are strong, they can break above here, and let's see how far they go. If you didn't take that, and you're waiting to see another pullback, and you don't get a pullback, well, you know, the market has kind of worked its way out of your reach until you see that, but that's, you don't want to be trading that close to the open and high, etc. But great opportunity. So, you know, you could have missed that 1/3 because you're not there or you didn't want to, and then you come back in the afternoon and you see another trade opportunity. So I kind of stopped somewhere in there where I was. Okay, we got time. Let me have a quick look at Euro as it's set up again on Monday. Okay, now this is very clever. Sharing is pause. Bring your share window to the front. What does that mean? Huh. Okay, this, I know what I'm going to do. Let's close this one. Aha. Okay, let's see. You are screen sharing. Just want to make sure. I think that's the correct one. Yep, that's Euro that's sharing. Okay, so same kind of thinking in terms of what I'm asking you to do is you take your trading forward. So these charts, I'm going to make them available to the admin team. I'll just post them to them. And, you know, if you want to have access, you can have a look at them. Or just go back to the recording and you can see it. That's probably better. Go back to the recording, have a look at it, and look at your, you know, do your own charts. But the thinking is exactly the same. Now, what I want to point out to you, because of time, is again that you can see there would be plenty opportunities for you to have taken the trades. Measured move to here, you do get the pullback. Okay, you could have taken the trade and get a double bottom, and you get that, and you say, okay, I'm going to get out here, no loss. Okay, or if you'd held it, keeping on to your stop at that level, you start to get these lower highs, you know, so you're still in the money, or you could take a trade somewhere here, and you can take your profits out at the level of support if you're not trying to manage your trade to see how much you can get. I mean, if you trade in the Asian session and you have time to stay in the market, try and manage your trades. And you can take a bit of profit out at this level and try and hold on to them. But if you trade in the US session, don't hold your trades overnight. If you are trading the 5-minute time frame, when the session closes, or the last couple of hours, just close the trades. You can't be trading the 5-minute time frame and then get to the end of the day and say, this might go quite far tomorrow. Now let me carry it over, because now you trade the daily time frame, or you trade in the 4-hourly time frame. That means your stop is in the wrong place. Okay, so you got to decide which time frame you're trading. So in any case, there is another breakout, pullback to the 10 EMA. There's a lower high. Could have taken a trade there. But we have a double bottom that's been created, which is what I just want to show. So if you went and if it was blown up a little bit more, close above the moving average, we have our pause. We have which is a since the market has gone up and come back, tested the EMA, could have put an entry above that or stop here. Okay, if you didn't take that trade, like I mentioned earlier on, and you're waiting for the pullback, there is a pullback. Okay, it's a long way off for your stop, but you can put that in there and hope to hold for the measured move of the breakout above that to there, and the market did get above that, so you would have been rewarded. If you're managing the trade, this is a classic one for if you're managing the trade and you've taken some profits out, even if you've taken half the profits out, what still remains, even if you don't add into your trade, if you just manage it and say, let me see when the market starts to pull back, I'm gonna get out, you will be able to make a lot more money. So I hope that's useful. I just wanna jump back. See if it allows me. There you go, to the live markets. Okay, so gold with a double bottom. We're saying, if the bulls are strong enough, we get a close above the moving average and the higher low, but we didn't get a close above the moving average, so we're still at the bottom of the trading range. So what's your mindset now? Your mindset is, well, because I'm at the bottom of the trading range. At the bottom of the trading range, you should be buying to go and make money higher. So I'm going to wait to see if the bulls are strong enough. They have to give me a close above yesterday's low, above the moving average, give me a pullback, and then I'm going to trade it and take it further. If the bulls are not strong enough, the bears are strong. The bears have to give me a strong close and follow through beneath this, pull back to my EMAs and trade it to here. Opportunity, guys. Keep your eyes on that. Okay, we were quite heartbroken earlier on with the euro, because we saw that beautiful setup, break beneath the moving average, follow through, hoping to get something at the EMA. We didn't get it. Okay, but what we've got so far, okay, so the market turned at the open of the day, created a lower high. Bears were strong enough to create that. So now we have another lower high. Okay, so what we want to see, if our bias is bearish at the moment, I want to see strength. I want to see the bears closing beneath the moving average, like they did here. Okay, give me a close beneath the moving average. Give me a pullback or a follow through. Then I'm going to look to trade. Or if they keep doing this, I want to see the lower highs. If the bulls are strong, well, they're going to break above this and pull back. Let's leave it at euro and gold. So I think great opportunity setting up on both euro and gold. Just stay focused, come back and look at them. And if they set up, take the trades, if you've seen it and it's clear and you are nervous, means you're trading too much in terms of lot size or risk, scale back your risk, trade a third of the size, whatever, but get into the market and take some trades. All right, guys, let me see. There's a last question or comment. All right, thanks, John. I appreciate your feedback, buddy. All right, guys, thank you very much. And the team in the office, thank you, guys. We'll catch up next week.